Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, December 30, 2014. You're looking at a daily chart of the SPY, and we had a down day today, which basically, yesterday I said I'm looking for the S&P to finish the year at about 2,100. It just felt like that was going to happen. Well, now today it feels less likely to happen because we only really have one trading day left, but you never know. It could happen. But what you're seeing now is nothing other than squaring of positions, mutual funds, pension funds, hedge funds, managing their books. They're getting rid of positions they don't want. They're maybe buying positions they do want. But certainly there was a lot less buying today than selling. And there's, when there's light volume, in both directions, it's easier to push the market up on light volume than it is to push it down. But certainly, if there's some selling pressure and there's light volume, it's easy to push the market down just the same. And that's what happened today. So I think you had some cleaning out of portfolios today, and that makes sense. I would have liked to see the market go towards 2,100 to hit that number, and then see what happens in the first week of January. But nevertheless, from way down here from couple of weeks ago, look where the market's come. We're not going to look for a big up move over the next day or so. But nevertheless, remember what I said when we saw this, what I called a fake print. This is one of those trades that never really happened, but it went all the way up to 213, which is pretty far up from where we are. That would coincide with about 2130 in the S&P, and that's not out of the question to happen in the beginning or towards the middle of January before we see a January pivot. So there's no short-term cycles right now I'm looking for. There's nothing that I can say tomorrow is going to happen this way, or it should happen this way, or next Monday should happen, or Friday I should say should happen this way. It's just the end of the year, New Year's, between Christmas and New Year's. There's nothing that should or would or could happen in terms of normal cycle analysis or market analysis. It's kind of an anything goes time of the year. Normally the market floats up. We did see the float up. You remember I told you down here you're going to see a rally into the end of the year. We saw that. So that we saw the Santa Claus rally, the Christmas rally. It happened. Now it's just squaring up of books, and I wouldn't read anything into a down day today. You may see another down day tomorrow. You may see a flat day, and you may see an up day. There's just no way to tell. However, there are some patterns out there that start to look interesting, what I think will play out in the beginning of January or before. So I did issue a trade alert to members and subscribers today, and we'll see what happens with that. It's a pattern that I like to play. It looked ripe, and even though I said I doubt I would see any trade alerts going out before the new year rolled around, when I see a pattern that works, I just go with it. I don't care what the stock is. I don't care what the earnings are. I don't care what time of the year it is. If a pattern says this should happen based on probabilities, then this should happen based on probabilities. And when we have a good risk-reward trade, we take the trade. And when the probabilities are in our favor and the risk-reward is in our favor, it doesn't matter what the name of the company is. It doesn't matter what the time of the year is. The risk-reward was in our favor, so I issued the alert to the members, and we'll see what happens. So we still have some pressure in oil. We have some nonsense discussions about Greece again and all that stuff. Don't pay attention to that nonsense. If the market goes up for 2 days in a row between now and sometime next week, nobody will talk about Greece again and all that stuff. And that's the way it works, and you know that if you've listened to me long enough. So don't listen to all the talking head nonsense. Nobody knows what they're talking about. Just watch the charts. Let the charts tell us what to do. Don't impose our will on the market. We let the market and the charts tell us what to do. And I know that sounds repetitive, but I'm going to say that for the rest of my life because that's the way it works, and that's what works in order to make money in the markets. So, what did I tell you last night? I told you we're going to keep an eye. I gave you a trade alert that we're going to keep an eye on based on a pattern I like, which was Seadrill, right? SDRL. So let's take a look at what's going on with Seadrill. Let's look at the intraday chart and take a look what happened. This is the 10-minute chart, okay? And basically, here we are at, where are we? Let's go to the morning. Okay, so the chart opens up down. I'm sorry, the stock opens up down, and it works its way back up all day long, which is interesting. That's a bullish sign. I thought immediately, oh no, I gave everybody, a trade alert that's not going to work out. But then all of a sudden, it looked pretty strong all day long, which is interesting. It's good, right? So what did I tell you? As long as the stock doesn't close below this level here, which is at 1145, okay, or let's go to the daily chart, okay, because this is the one I showed you last night. All right, the daily chart, okay, the level was 1118, pardon me. As long as the daily close wasn't below 1118, $11.18, we're okay for this trade to move higher. And I said as long as the sideways movement continues and it doesn't close below 1118, the stock should move higher, and we're going to look for a minimum of 13 and a quarter. So that's where we are. So the stock was up a couple of pennies today. No big deal. We're going to keep watching it. I'm going to keep talking about it until it either fails or rewards in our favor, and we'll see what happens. Those of you that took the trade, that's fine. Those of you that are just watching it to see if it works out, that's fine. You do whatever you want with your own accounts. The purpose of this was an educational session to show you a type of pattern that normally works in our favor. When I see a bullish pattern like this, these are the type of trades I like to take. And this is very similar pattern to the trade that I issued to the subscribers today. So we're going to see how that works out. It's not Seadrill, it's something else. Pardon me. And so we're going to keep watching Seadrill, and I'll talk about it each and every day until it either works out or fails, and we'll see how it goes. Okay, so let's look at a couple of other things. I know sometimes I tell you I like to look at other market indicators. One of them is the small cap index, the Russell 2000, which is Small Business in America, IWM, but there's not much going on. It basically tracked the market today. It was down about 0.5%. The S&P was down about 0.5%. So there's no tell there. There's nothing telling me that the market is or the small cap index is leading in one direction or another. So that's fine. So we'll leave that alone. Let's look at JNK. Let's look at some junk, right? What's junk? Junk is the junk bond index, which is the high yield index. And remember, I haven't talked about this one in a few days, so we'll just give a little refresher. The high yield index, the reason it was under pressure coming from this point down here was because a lot of the small oil and gas exploration plays that are leveraged companies, they borrowed money to buy equipment and to get land leases and or drill for oil and gas when oil prices were higher. Okay, those are the companies that are going to have a tough time paying their bills, right? What are their bills? Their bills are the loans they took, and they had to take them at high yields, which is also considered junk bonds in some cases. So this is the junk bond index because there were high risk plays. So they didn't pay 2 or 3 or 4% for those loans. They paid 6, 7, 8, 9, 10% for those loans. Excuse me. So we watch the junk bond index, and the junk bond index is starting to struggle a little bit, and that a lot of times will move before the market moves, specifically on the way down. So I'm keeping an eye on it. We'll see what happens. This 20-period moving average, which is this red line, should act as some support, and if we get a little bit of a bullish run in the beginning of January, you should see this move up as well. So it's not telling us anything yet, but I've got my eye on it because it is a very good market indicator, specifically right now at this point in time, since we are having difficulty in the energy sector for all those reasons. So I'm keeping my eye on the JNK for everybody, including myself. Let's look at the USO today, which is the at least the daily tracker for oil that we use. Well, that wasn't USO. USO. Talking and typing, it's impossible. Okay, so nothing going on with the USO. Basically, the index was didn't do much today. The actual let me get the final numbers here. USO. It was flat. Okay, so the USO was flat today. It was down and then it was up. We'll look at the intraday. You didn't have much going on. It's basically a quiet market. There's nothing really one way or the other that's telling us anything's going on. But the price of crude oil, right, is again, it's slightly up in the Globex or after-hours session. It's almost at $57. Now we're trading in a range. Now it's kind of a 50. $54 to $55, $6, $7 range. We'll see what happens. It's going to break one way or the other. Either we're going to go down and test $50, and in my book, I have a number of 48. That's a mathematical level that I've calculated, and that we can reach if we go down, and if we break down the previous low, which was 53.60. If we go below that, then in my book, we're going to 48. And if we break higher, you'll probably get back into the 60s, but don't look for much more than 65, maybe 70 if we get lucky. And if that happens, a lot of the oil sector stocks will rally. There's still a lot of short interest there, so you'll see a lot of inflation happen in the energy sector, and everybody will think oil prices are rising again, and all the energy sector prices are rising again, and everything's going to be fine, and it's not. Oil's going to be under pressure for quite a while. Into 2015 and beyond, as long as the dollar remains strong, and the dollar is very strong, and I've told you my target on the U.S. dollar is to be above par, which means par would be 100 cents on the dollar. Right now we're trading at 90. I'm looking for a number around 105, and as long as we have a strong dollar, we're going to have weak oil prices. Why? Because globally, oil is priced in dollars, okay? So anytime anybody wants to buy a barrel or a shipload of oil, they have to convert whatever currency they're buying it from into dollars. If dollars are stronger, they're paying more for oil, the price gets pushed down. It's really that simple. Okay, let's take a look at gold, and then we'll give it a wrap. GLD today had a nice up day. Okay, it was up much stronger earlier in the day, and then it kind of faded away the rest of the day, pulled back. This is a 10-minute chart, but we still stayed above the gap from this morning. So we finished here yesterday, gapped up in the morning, and we came almost back in to test this gap level, which is a normal market occurrence. It really stopped at the 50-period moving average on the intraday chart. So it's the 50-period, which is blue line. That's on the intraday. That's kind of where you found some support, and it never really tested this gap, but we came close. So we'll see what happens tomorrow. If we go and look at the daily chart of gold, you'll see that we had a nice up day in gold, and now we're above the moving averages on the daily chart. And like I told you last night, we're in a seasonally strong period for at least the gold metal, precious metal, but gold and silver will play along too. And so I expect higher prices into 2015, but expect volatility, especially with gold. So that's basically nothing's changed except we had the update today in gold, and that was nice to see, since down here I've been telling you to accumulate gold. It's okay to accumulate it down here, knowing that we could test the lows from before. Maybe we flush through the lows one time just to clean out the rest of the shorts, and that would be it. But we're in a seasonally strong period, and remember, low, higher low, higher low, higher low. That's a bullish sign. So as long as we stay above this level here, I'm still in the bullish camp in gold. And I think that's going to be a wrap for tonight. Hopefully it's helpful. Folks, I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.